Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Gianni Kovacevic of Kovacevic Consult. Thanks for being with us, Gianni.
Thanks for having me.
Now, you're known as a copper expert. You've been doing this for a long time. You're a well-known speaker around the world talking about the supply and demand fundamentals of copper. Can you give our audience a bit of a background on how you got into the copper space?
Yeah, sure. My background is in energy savings. So I'm born and raised in Vancouver, so it's the, we could argue it's the world capital of junior resource mining. And with that background, it's more of a supply and demand expertise. So I know where copper is used, and now being in Vancouver, I know where it's coming from, which is all statistics. So if you've seen a fundamental change in how we as a global society are using copper, which is what we've witnessed, the speeches that I give at conferences around the world is exactly that. It's that balance of supply and demand of copper with a background in energy savings.
Can you talk a little bit about then the supply and demand of copper, how things have changed that's brought the price of copper to sort of where it is, and what you see coming forward?
A lot of technology has happened in the world where we have little things. There's no greater collusion against the technologies of the world, where we look at automobiles today are far more deluxe than they used to be. They come with air conditioning and power windows. And so they're using on a per automobile basis where we're selling around 70 million cars per year. So when you superimpose that with all these deluxe features in them, it's a lot more copper. Other things like air conditioning, which was not so common, say 15 or 20 years ago, you see these split systems everywhere, including places like Russia. Even though they only use it for maybe 2 or 3 months a year, when they turn it on, the entire electrical system in the city and the country has to be fortified so you don't get a blackout. And not only are these things using 15 or 20 pounds of copper per unit, you have this subliminal usage of copper with the fortification of the entire electrical system, where places like Russia and of course around the equator where most of the people live.
And that's the sort of demand side. What about the supply side?
Supply side is the biggest concern for copper. We know demand has grown approximately 3.5% for over 100 years, so it's very reliable. But on the supply side, we've seen a lot of money invested in exploration in this past cycle over the past 10 years, but there's been very few significant new discoveries. There have been even fewer major development projects that have went into full commercial production. So we now use around 19 or 20 million pounds of copper per year. So if we're growing at 3 or 4%, that requires 700,000 or 800,000 tons of new copper per year, which is a very large mine. We look at the top 20 copper producers, and once you pass, the Escondida and the Grasbergs, you go down to 300,000 or 400,000 tons per year for a very large copper mine. Copper mines we're not building. Mm-hmm. So it's not demand destruction we have to worry about, it's the keeping up with supply. So we've seen this CapEx that's taken place. A lot of it in Chile is not for new supply, it's just to keep up with existing supply. Head grades are falling, which means you need to process more material to get the exact same metal yield. So supply is a concern, and it's going to continue to be so for probably another decade.
And you mentioned top 20 mining companies out there that are in production, but I know that you don't look at that level to be investing. You want to get in early, you want to get at the ground floor where there's significant growth potential and look at sort of that mid-tier or near-term production type company. How big is that space?
Very good question. Most junior resource investors would recognize that there are copper companies out there, a lot of gold companies, but if you look at the universe of copper development stories, these are copper stories that are plausible to go into production, or they're advanced stage or development stories. I follow a list of around 28 or 27 companies. So the universe is very small. When you look at that same universe, if you look at companies that do not already have a partnership, by that I mean, does someone else already own half the project or a quarter of the project? If they pick their development partner, are they in a place that I feel comfortable doing business in? Mm-hmm. Do they have a resource that's high quality, that's at the feasibility stage? Are they ready for development? Is there a possible plan to finance these projects? The list is very small. So from that list of 28 that I follow them all actively, there's probably only 5 or 6 that have meaningful catalysts that will affect them in this market, because you need to know that all these things can take place, and in a place that I'm comfortable to invest in because it's a very favorable mining jurisdiction. Mm-hmm. So all of a sudden the universe becomes very small to maybe 5 or 6 companies, where myself I'm only invested in 3 copper companies at this time.
Now, that's not to confuse our viewers with the exploration companies that are looking for copper or drilling off a resource or that type of thing. That's not what you're talking about. You're talking about the ones that are near-term production. That's
correct. And I think that's where the catalysts are right now in this nervous atmosphere that we're in. Not only that, all these companies have been dragged down significantly, and we can look at that from where maybe they raised their highest financing and where they're trading at today. How much money has been spent on their projects? Are they at a scoping study level? Are they at a feasibility stage level? Some of these projects have had $100 million invested in them to get to where they are, and they're trading at a fraction of that. Yeah. Whereas these other companies are still delineating resources, and I don't think there's any kind of a premium being paid for that. And nothing will change because the very senior investor is probably not going to move the dial on those companies in this atmosphere. They'll sort of be like the second tier assets. Once people have made a profit in the development stage stories, they'll probably move into these drill hole plays.
Yeah. And what are the companies that you're looking at right now? What are a couple of the ones that you like that fall into that criteria in the copper space and the near-term development?
For open disclosure, I own both these companies. I own the stock. I like, in no particular order, but I like Nevada Copper, which has a large copper project in Nevada, and I like Curis Resources, which is in Arizona. Why do I like these companies? They're both, one in Nevada, one in Arizona, and you could argue those are the two Beverly Hills addresses of mining almost in the world. So people want to do business there. It's mining country, in particular Arizona's copper mining country. There's a very low capex on both projects. Very important. You've seen projects that are $5, $6, $7 billion of capex. Who's going to finance this?
Money's really key right now.
Money's very key right now. These projects are, I call it a capital intensity per ton of production, very low. These numbers are so low, it's like setting your clock back 15 years, where they're $7,000 or $8,000 a ton of production. So with the Curis project in Arizona, it's under $250 million for an annual yield of 80 million pounds of copper. That's meaningful. Nevada Copper's project, which is open pit and underground, is approximately $1 billion capex, and they've just updated their underground feasibility. So there's optionality where you can do the $300 million project, meaningful yield, 80 million pounds, or you can do the $1 billion overall project. So I also like the fact that they have a very low share count, where dilution has certainly killed some companies, and it could possibly kill other companies with this never-ending plan on how do you finance these projects.
Well, and that's really the question too when I look at copper companies is what are they going to do to finance to get into that production? Because even if they're not doing the billion-dollar capex hit, which is almost impossible to finance in this market, 200 or 300 million is still a big nut, or 150 is pretty big. What do you think these companies might do?
If we look at the examples that have already taken place where senior partners have earned into projects, these kinds of projects, remember we want to talk about the Beverly Hills address, the beluga caviar of concentrator product, places where they do want to do mining, where they're earning in on the NPV and not the share price. We can look at other examples. So both these projects have very high NPVs, but very low share prices in comparison to the NPV. So I would look at them doing partnerships based on these strong NPVs, good location, strong project economics, using a conservative price of copper, meaning someone would want to earn into these projects even in this atmosphere, where you will see this the propensity to want to finance these projects because we do need more supply. That's irrefutable.
And what are the type of groups that are going to do that? That's not going to be a Toronto brokerage firm.
No, I don't even think it's going to be an Asian firm. It won't even be like Chinese or Koreans, a typical, or the Japanese for that matter, the people that have been earning into projects lately. You can see integrated North American copper companies, companies that have exposure already to assets within those areas where they want to continue doing business, where they have a comfort in doing business. There are, in the state of Arizona, for example, there's I think 16 or 17 SXEW operations. So what Curis is building it's an in situ leach, but it's an SXEW operation. So it wouldn't surprise me to see them to do a partnership with someone that's in that business already, in that state, within Arizona. As far as Nevada Copper is concerned, that could be something where they themselves could build the underground portion. They could do a royalty stream. So if they sold a small percentage of the revenue stream, it would give them a meaningful amount of capital to be able to follow that, maybe a 70-30 or 60-40 debt equity split. Projects financed.
And the whole point you're looking at is no more dilution, or as minimal as possible from this point going forward, so that when you do get a lift on the stock by that revaluation based on the NPV, that you get a bump up in the dollar value of your shares as opposed to a dilution of the company.
That's correct. I look at that as what I call torque per share. where if you only have, these companies have, one has, Curis has 56 million shares and Nevada Copper has 80 million shares outstanding, a lot of torque per share. So because they're on the cusp of production, and in copper mining it takes 10 years or 15 years from discovery hole to production, that's on the doorstep of production. And they're also trading at 2 or 3 cents a pound in the ground, which is a pretty nice circumstance to be in.
The other thing to talk about too, the companies you've chosen is the management. That's key, something I always focus on, and I think you've sort of hit the nail on the head with these companies.
Yeah, absolutely. Management is, and it's told in the share price. So you look at a company's share count. What have they achieved to date with the share count they have? Where are they in that cycle? We know that we have discovery, delineation of resources, maybe going to measured. You have your scoping study. You have your pre-feasibility study, and then a feasibility study. Well, this takes money. The Curis project, $100 million has been spent on that project already to get to where it's at. The Nevada Copper project, this thing has been running for better than a decade. And these management teams, which is financial architecture, which to me demonstrates strong, prudent management by not blowing out their share structures, we look at those kinds of management teams, very strong management teams, to be able to deliver shareholder value and to get us over the finish line, which is where you get your, you create stakeholder value for everyone involved, not just us as shareholders, but those communities, those people that want those projects to go forward, and they can benefit in the, in the employment stream and the tax stream from those projects.
And who are the people behind these companies, the management or the teams, and sort of what have they done in the past that gives you the confidence that they can do it again?
For the Curis project, it's run by the Hunter Dickinson stable, who have companies such as Tizico, where one of my examples, Tizico did their deal with Sojitz, where they were able to sell 25% of their Gibraltar mine for $200 million. That was a meaningful deal. So I have a lot of comfort with Hunter Dickinson moving that project forward. Nevada Copper is 100% owned by the shareholders of Nevada Copper, and it's run by a fellow, an accountant actually, named Giulio Bonifacio, who's he's a tough guy, but he's a numbers guy, and he's been able to do almost unprecedented job in junior resources to be at the stage he's at right now, with that feasibility stage, total resource of 10 billion pounds in Nevada, and he's got 80 million shares.
Yeah, phenomenal job.
Phenomenal,
yeah.
Congratulations to them.
Congratulations, exactly. I do own Curis. I do not own Nevada Copper, just in full disclosure.
Okay.
Thanks very much, Gianni, for being with us and enlightening us on copper and a couple of the companies that you like.
Great, thanks for having me.
Again, my name is Scott Gibson with Beneath the Surface. Thanks for being with us.